Welcome back, everyone. This is our weekly gold update. Gold's price steadied in the most recent daily sessions but maintained its downward trend formed since the past months. Even though the precious metals price is higher from where it started at the beginning of the month, some bearish tendencies have managed to cut back gold's advancement in December. Some of the most probable matters currently relating to gold trading will be identified and briefly overviewed in this report. Our aim is to provide awareness and ideas to gold traders. Our technical analysis at the end will complement our fundamentals in order to provide a more complete analysis. First of all, the USD, of which gold's price is denominated into, continues to be on the back foot, moving even lower in the current week. Despite the fact that gold and the greenback tend to have a negative correlation, in recent months, both have lost significant ground moving downwards for various and different reasons. The greenback's movement is mostly dominated by the US fiscal stimulus packages aimed at speeding up economic recovery from losses suffered by the COVID-19 outbreak. Even though no stimulus package has been announced until this moment, the matter seems to be in the center of the market's focus. Media headlines regarding the negotiations seem to keep traders in a wait-and-see position, and any announcement could increase volatility and force gold's price into a sudden movement. Even though gold's price is significantly higher from where it started in January 2020, since the previous August and the months forward, a strong selling appetite for the precious metal have brought it much lower. Impressively though, at the moment, gold's price is approximately $300 higher from where it started the current year, even as it has been in a selling momentum for the past 4 months. In our opinion, gold's price continues to be driven by news regarding the vaccine distribution and usage in various countries. As more people are vaccinated around the world, we could say that economic activity could continue to be on the rise as they will feel much more confident to leave their houses. However, due to the fact that COVID-19 cases are still on the rise globally, forcing governments to impose new lockdown measures, the situation remains very fragile. In the short term, traders might be finding reasons to add long positions on gold, as was the case for today's European morning session. On a separate note, more economic outlooks from many countries around the world will be coming up in the following days, with a number of central banks having interest rate decisions with conferences or reports. Countries like the US, the UK, Japan, Norway, and Switzerland will be providing information on their economic performance from their central bank's perspective. In our view, the most important for gold traders is the US Federal Reserve interest rate decision and its accompanying press conference. In many cases in the past, the Fed's events have produced significant market moving effects for gold's price. Thus, caution is advised for traders with open positions on gold or traders willing to trade the event. Please note that this is the final FOMC meeting of the year, and comments on how business activity, employment levels, inflation, or investment appetite could be of particular interest to traders. The event comes up on the 16th of December in the American session. Those were the fundamentals of our report. Please stay tuned for our technical analysis. This is gold's daily chart. Gold has been trading between our R1 1870 resistance level and our S1 1820 support level since the 2nd of December. Both the pre-mentioned levels have been tested in more than 2 daily sessions in the time frame we have noted, but have not been breached, which is evidence that the levels are currently in the market's focus. To the upside, the levels we have noted above the R1 1820, which is the highest price reached so far in December, are the R2 1910 and the R3 1955. To the downside, below the S1 1820 support level, we have noted the S2 1775, last seen on the 1st of December, and even lower the S3 1740 as our lowest point for this report. Please note the RSI indicator below our chart has formed a slight upward slope, implying some bullish momentum is in place currently. Overall, gold's trend, according to our daily chart, could be downwards. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, make sure you share and subscribe. Thank you very much for your time and enjoy solid trading.